Good morning, Futex traders, and welcome to our subscribers on the outside, and welcome to this price action replay trade setup opportunity replay that we're going to talk about. So, firstly, what we're going to talk about is just something that's very important before we move on to what the crux of the session's about. But developing the edge, that's what Futex is all about. That's what Futex Live is all about. We believe that through experience and seeing things time and time again and recognizing various patterns, we can develop certain edges that allow us to beat that market, time and time again. And that's how we are able to make salaries as day traders at the end of the day. So I just found this on Twitter this morning, very, very interesting, worth a read through, and I'm just going to read it through and then we can move on. So, welcome to the hardest game in the world. Unfortunately, you're playing with some of the sharpest, fastest, most intelligent, well-informed, stubbornly irrational, and in many cases unethical minds in the world. You're up against the computer that can react faster than you, the trader who has more experience than you, the fund that has more money than you, the insider that has more information than you, the others that will misinform you, and the inner voice that will do its best to undo you. So leave all your dreams of making quick and easy money behind. The first aim is survival. Your absolute first goal is to learn how to stay in the game. You can only do this by mapping the territory, by understanding how the enemy thinks and acts, by having a solid game plan, and by picking your battles very, very carefully. Alright, now this is the crux of what this is all about, guys. What we're trying to achieve with every one of these sessions is get you to understand, firstly, what can you and can't you do as a trader. In other words, if we can teach you the can'ts and how to avoid doing the can'ts and the no-nos, we're already giving you a little bit of an edge. Ultimately, then it's up to you to go and find the opportunities that make you money. So that's the crux of the session, and let me show you now how we can create some sort of an edge using a very specific data piece that comes once a month. So, moving into it, the crux of today's session is effectively rumor versus fact. In other words, when there is a rumor in the market versus when there's factual information in the market. And I'm going to show you today two different videos with two different pieces of price action in the same market, being the cable against or the pound sterling against the US dollar. And what I'm going to show you is how the price action will effectively guide you in determining what is a rumor versus what is a fact and how you can ultimately make money. So first things first, let's get into it. The first video we're going to talk about is the UK Bank of England decision that we had back, not last week, but the Thursday before. Now, the important thing to understand was there was a rumor in the market that had come out from quite a well-followed analyst on Twitter, saying that there was an expectation or a possibility that the vote structure was going to move away from a 9-0 in favor of no hikes to a 7-2 in favor of two members of the Bank of England voting for a rate cut on that day. So huge sort of in terms of the fundamentals, complete outlier against any expectations. No banks were talking for even the remote possibility of a cut. And suddenly this rumor comes into the market at the start of the European session on the Thursday. So the first thing to talk about now is let's look at the price action. Now, the important thing to understand with a rumor is that there will be some pricing. The key for you as a trader to understand is how strong that pricing is going into the actual event. Because if we get a lot of pricing, so let's say, for instance, in this case, if there was a rumor of a 7-2 and there was a lot of people thinking this rumor had credence, what we would have seen is quite an aggressive sell-side action into the actual, into the actual announcement. More importantly, the price action post the announcement actually tell us how much of a belief there was of that rumor. So what I'm going to do is I'm going to get a chart up so we can talk just briefly about the pricing going into it. So as we can see here, where this red line is, or even the last 10-15 minutes before, there was a little bit of price action or a little bit of sell-side action. But guys, note, very importantly, the price action will be particularly obvious when you see a rumor that's being accepted. In other words, we wouldn't see this sort of dribble down. We'd actually see very aggressive, direct price action down the page. So that was the first clue that, the market wasn't really necessarily believing this rumor. However, we still have to pay attention to it because it comes from a relatively, well, I don't want to say informed source, but a source that people pay attention to. So that's the first thing to look at is how does the market price response look going into the actual 9:30 release, or sorry, the 12 o'clock release for the rate decision. Now, let's look at the ladder. Let's see how the ladder responds. Now, bear in mind, if you're pre-positioning for a rumor, what you're going to do is you're going to effectively almost position yourself as close to the event as possible, because that reduces your tail risk. So effectively, if there was a rumor and we were sort of, there were a lot of people paying attention to it, we should have seen this cable sell off into the actual data. So let's watch what happens. Let's play this through and let's look how this cable responds going into the number. So this is roughly about a minute or so before the actual data release, and we can see at the moment the bids and offers are still quite thick. The market makers are still showing the market, and what we want to pay attention to is how does the market respond, firstly within that last couple of seconds going into the actual release, but then also what happens when bang, the announcement comes out, it's 9-0 as expected, rumor is false. So those are the two things we want to pay attention to. Bear in mind, we also want to watch the price action post the number. In other words, if there was a rumor and there was a lot of pricing going in and it came out 9-0, we should have seen a very aggressive reversal. So let's see how the market responds going into this data. Now, what I do want to point out is I want you to closely pay attention to where this mouse is hovering. Why? Because if this rumor was given to be true, remember, it is against all expectations. It is an outlier, which means there's a huge opportunity for us as day traders to make good, easy, quick money. What do I mean by that? In other words, if it comes out at 7.2, the market would likely blip down the page quite aggressively. It would then continue and hold the offer as we see the market continue to sell off into the actual release. So that's the kind of price action that you would see. Because of that, note the mouse hovering over the offer. In other words, if you want to take full advantage and be quick, you want to be already hovering over the sell side in case the rumor is true, proven factual. Okay, so this is a few seconds before the data. Note the spread. We've got a 10 pip spread, market makers are gone. Almost a 20 pip spread here, the entire market's gone. There's no market before the event, okay? And bang, the data comes out now and it's announced. And 9-0, market's announced 9-0. Note the market makers come back into the market now. What we would expect to see, it's 9-0. We know there wasn't too much pricing going into it. So to be a buyer, yes, that is the right idea. But let's see what happens when you do try and buy this market. So we've got the execution on the buy there. And note the price action, okay? Note how slow it is. Note the size going through, right? Note a lack of real sort of anything going through the market. Now, bear in mind, obviously, we did have the minutes at the same time, so the market was sort of almost reading across the minutes, trying to understand and interpret the minutes, trying to see if there was any value in the minute. So straight away, you've got to say to yourself there, that price action was definitely not reflective of a short position going into the actual announcement. Had we seen a pricing going into it, you would have seen this market not only just gone bid up 10 pips, you probably would have seen it rush 30, 40, 50 pips to the upside as everyone short needs to buy out of those positions. So straight away, we can analyze and we can look at this and say, well, that rumor was not a good rumor. There was definitely not many people paying attention to that rumor. Therefore, the next time a rumor comes from that source, it's not that we don't want to pay attention, but we want to make sure that if there is the price action going into it, then we should get the price action going out of it. And that's the first little edge, guys. That's the first sort of thing you need to pay attention to. If you get that price action pre a number, pay attention because you're probably going to get the price action post the number. All right, so that's the first one we want to take a look at. As a result, I'm just going to show you the chart now. Once the market did settle down, note we did get quite an aggressive sort of move eventually back up the page as the market priced in a nice solid number. Oh, sorry, as the market priced in what was mostly expected. So that's effectively our first price action play. Let's then move on. Now I'm going to show you a different kind of price action play. I'm going to show you a price action play where the market actually has the information. So it's not only, there may be a rumor, but there's actual factual information in the market and people are actually positioning on that information. Now, it is notoriously known that a lot of UK data, and there's maybe 3 or 4 of them, that are leaked to the market. So it's so important, guys, if you want to trade data and you want to become good at it, you have to learn, well, what data actually moves the market, but more importantly, what data can you as a day trader trade off to make money, okay? Now, a lot of UK data is leaked, and as a result, you can make money off that, because if you know there's pre-positioning into certain data pieces, then if it comes out sort of as expected, well, then you'll get a move. If it comes out against expected, you'll get a move. Either way, there's volatility, which creates opportunity, and that's how you develop your edge. So the second one we're going to look at is the UK CPI data. Now, I'm just going to show you, this was back in February, and we can see that the UK retail sales year came out at 2.3%, a lot higher than the 0.8 forecast. Now, retail sales is a lot, being sort of paid a lot more attention to, since over the last couple of months, simply because it is the consumers that are driving the UK recovery story at the moment. So at the moment, the market is quite sensitive to UK retail sales. Now, as we can see, that is quite a large beat. It's well above any sort of expectations or any kind of range of forecasts. So let's go and have a look now and see how the price action responds in this case. Now, bear in mind, we want to look at the chart before going into it. Now, had you paid attention, had you actually looked at the cable going into this data across the board, in other words, looking how the cables or the sterling is performing against its major trading partners, being the euro, being the yen, being the dollar, you would have noticed that the cable was actually performing quite well relative to every other currency. So there was already a little bit of a clue going into the actual data. More importantly, note in the last 5 minutes, suddenly we started to see cable take a relative strong bid. So nothing was happening, and the market suddenly went from 143.18s all the way up to the high of the day. Now, this is just before the data. Again, note we saw a little bit more sort of direct price action pre-data. Let's see what happens now once the data comes out and confirms that there was aggressive price action going in. Note the spread, note the market makers pull, so the market goes nice and thin, and let's see what happens now when the market receives this new information. So in a second now, we're going to see this market thin. So bang, straight away the market's been told 2.3 versus 0.8. Very big outlier. Note, we want to be looking now, when we get these outlier opportunities, we want to be looking to be aggressive. Why? Because the market has given us an outlier information. However, note, UK data is leaked. Therefore, we have to be aware that whilst we want to be long, we want to try the long side. The minute the market cannot hold that bid, cannot play that outlier trade, we know there's a natural positioning in the market that is long. Therefore, we have to sort of pay attention to any kind of reversal play. So let's continue this on and see what happens. Now, the market effectively blips up to the 40s. Note we try the long initially. Straight away, we get the long side. Now, the market sits here, it holds between 17s and 24s. Holds, holds, holds. Note, our first bounce point, 143.17s. In other words, if that price goes, the market is likely to wash out anyone else that's bought long on the outlier data. So that's our key pivot point, and we're going to pay attention to that once it gets below it. So, as we can see, if we look at this chart on the left, the market blipped up from 18s to 44s, straight back down. So in other words, someone has taken profits on the number which was already in the market. That's why the market couldn't even have a second look up, because someone has utilized the liquidity to get out of longs on the data. Now, let's pay attention and see what happens once we actually get below the 17. So the market tries a bid, it tries to go up, it gives the longs an opportunity to go up. And note now, let's see what happens, and let's see how this market plays out over the next couple of minutes. So 17s to 25s, 26s, that seems to be our range. The market sits in this range, and again, we try the long out. We want to see, we can see a little bit of a buyer there, we can see a little bit of a buyer. Note the stop. The stop's going to sit in below those 15s and 16s. Now, one of the tricks with outlier pattern plays, and you'll often hear me talk about this, an outlier pattern play should always retest the extreme. In other words, if this is going to work, we should at the bare minimum retest 45s. That is the pattern, that is the definition of an outlier. It's such an outlier, the market should be very heavily leaning towards one side. So the first clue is on this up move, can we retest that previous high? Can we actually retest? If we cannot retest that high, it's telling us a lot about the price action. It's telling us a lot about what's actually gone on in the last couple of minutes, that the information that we've received was already in the market. It's not new information. And that's how we use price action, guys. We use the way the market responds to information to gauge what the market knows and what it doesn't know. Now, note, we got up to 35s. We're back to those 17s we spoke about. The market comes below it. Let's see how it responds now. So we can see the market goes down to 15s, comes back to the 17s, goes down to 12s, 11s. So note, once we took out the 17s, bang, all the long positions now are washed out of the market. They've stopped out below those 17s. The market sells all the way down to the low before the algorithms take a bit of profit on stops. Okay, guys. That is a reversal play. So in the one example, we're getting a rumor and we see the price action response. In another example, we've got a fact in the market, which is that the data is going to be higher than expected. The market absorbs that information and price responds in a completely different way to what is expected. Now, if you go back 10, 15 years ago and you talk to a lot of pit traders, you talk to a lot of guys that did particularly well in sort of 2000 to 2010, they will tell you that data used to be far simpler to trade simply because if it came out in an outlier, you traded in an outlier. Now remember guys, the game's changed. The edges you have to develop have to change. You can't stick to the same edge and go, well, the number was so much better. Why is cable, why is this not absolutely flying up the page? It doesn't matter. What matters is how does price respond? That's all that matters. You want to be a day trader, you have to learn to listen to the price and watch how it absorbs and takes in various pieces of information. So that's the retail sales, two very different sort of price ladders. One was a rumor, one was a fact that was in the market, same market, but moves completely differently. All right, guys, so that's how you can determine, between different kinds of positioning in the market, watching the price action afterwards and getting an idea of what to expect going forward. So that's our cable play for today. If you have any questions, just remember, guys, every single day, if I can leave you with one thing, make sure you develop some sort of an edge every single day, whether that's technical, whether it's psychological, whether it's a pattern play. Develop your edges, because it's those little edges that you develop that are ultimately going to define whether or not you succeed in this job. Good luck for the rest of the day, and we'll catch up again soon.